Hi, Teresa Timms here, president of TDR Mortgage in Upland, California, and you can find me on the web at the SoCalLoanPro.com. I'm going to speak about what lenders look for when they're qualifying you for a home loan and you are a W2 wage earner. It can sometimes get complex with unique situations. If you're just somebody that makes, let's say, $20 an hour, you work 40 hours a week, you have a job where if you take a day off, you're covered and it represents a 40-hour work week, then what we do is we just calculate your income, $20 an hour times 40 times 52 divided by 12. That will be your qualifying income for a home loan, whether you're purchasing FHA, VA, conventional, jumbo, pretty much across the board. That's a standard way to evaluate your income. Additionally, lenders look for if you earn bonus or overtime income. We will allow that income to be calculated in your debt ratios. Stop calling me during a live broadcast, for crying out loud. We will allow that in your debt ratios as long as it's occurred for 2 years. Bonus income and overtime income can be tricky. I am what's called a technical loan officer, so I don't rely on other people to tell me if a file income is good or not. If it's something that I believe in and I can make work within reason, it's something that I can fight for. And oftentimes I've turned a file in and my processor is like, oh yeah, this isn't not going to work. Or it goes to the lender and the lender's like, yeah, that's not going to work. But if it's something that I really believe in, I'm going to make that work, and I'm going to make it work before you get into escrow. We're going to work out all the kinks before you get into escrow. So I know and understand guidelines, and many times I have been able to do a deal when other lenders, when people have been declined, just because I understand that income part. And then it's not just understanding the income part. Sometimes it's going deeper and being able to, sometimes what something appears, it's not. And I'm trying to think of a good example of that, but I can't right now. So we'll just move on. So now what if you work 40 hours a week, typically, but maybe you're out of vacation pay and the last 2 pay stubs we get are, you've only worked 36 hours. You didn't have anything to bridge that gap. What I would be able to do is I would work something out where I did a letter of explanation supported by pay stubs the entire rest of the year that showed you traditionally work a 40-hour work week. Now, what if when I get those pay stubs, I discover this is kind of like a typical thing. Sometimes you're working 36 hours, sometimes you're working 32 hours, and then like a whole month you'll work 40 hours. Well, when this is the case, then we cannot use that 40 hours. What we'll have to do is average your income over 2 years. And there are different strategies that I use to come up with a calculation and be able to sell it to the lender or to the underwriter, and depending on whether it's FHA or conventional. So it can get kind of tricky. Now, if there are any questions, I'll answer those questions after the broadcast. So, Jocelyn, did you need something? Do you want to say hi? Because you got that cute shirt on.
Hi, everyone.
Bonus and overtime. So you can really get caught up in this. We have people a lot of times where they're in the trades and they're making a significant amount of income on an overtime basis. And if you are traditionally, we don't need to look at your 1040s, but if you're 25% of your income is commission based, we need to look at your federal form 1040s and look at all the other things that you may or may not be occurring, such as business deductions. On your commission income, that is pretty straightforward. It needs to occur for 2 years, not like not like 23 months, not 20 months. It really, really needs to occur for 24 months. And I have been granted exceptions in the past, but it really, really is tricky, and it has to make sense. Maybe you're working bonus, you were receiving bonus instead of commission. And so we'll, kind of work something out with the underwriter. It also depends on too, like the rest of the file, like how strong is your income? How much residual income do you have? Maybe you have a family member that's not going on the loan that's contributing to the household income. Maybe you have a substantial amount of reserves. So there's a lot of ways that you could figure things out if you know how to approach it, structure it, and sell it. Selling loans is selling. I call it selling, but basically it's structuring. Giving the underwriter reasons to believe in the file, substantiated by evidence that maybe they don't think of, or maybe when the file gets all closed out and this underwriter was super aggressive on the income, like I am a lot of times. Maybe they're super aggressive, but they didn't have clear documented explanations in the file when FHA went to review it. So I'm all about making my underwriter's job easier, and so that they can see that, picture as clear as possible. So I'm all about breaking it down, giving evidence of why things happen, and, writing letters and stuff like that. Now, what if you were a W2 person and you've been W2'd in the computer industry for the last 5 years, and you got a really great opportunity to get a job promotion, but it's going to be 1099? What about that? So basically how you can look at that is, if you go from W2 to 1099, even though it's the same line of work, now you're technically what's called a self-employed person. 1099 income is basically you make $4,000. They give you $4,000. They don't take out the FICA, the federal tax, the California taxes. So then you're going to file a Schedule C. And so because we don't have any history of you making that 1099 income, even though same line of work, maybe it's even for the same company and you're working for them as a contractor, but it's not going to fly. Now, what about if you've been a 1099 self-employed person and you've been filing your Schedule C, and let's just say you're making $75,000, pretty regular, just really basic, regular credit scores. You're doing 3.5% conventional, and now you're going from 1099 Schedule C, self-employed, and you're going to be a W2 wage earner. Well, in instances like that, it's not like, oh, snap my fingers, you're approved. There's a lot of other stuff that goes into it. But a lot of times, if it's reasonable, we can make that happen. If you're making $75,000 1099, and then now on your W2 job, you're making $200,000, that's a bit of a stretch, and there'd be a lot of other things to consider. So you go from 1099 self-employed Schedule C, $75,000 a month, and now you're going to make, I don't know, $90,000 or $100,000 W2. Well, that's pretty reasonable, right? That's not way more than you were making before. That's kind of in line. It's when things are like really out of the norm that it brings questions in, and we have to substantiate whether or not that's a suitable risk for the lender. For me, the lender that's arranging, I'm called a third party originator, for the lender that's arranging these loans. And I want to let you know, I'm really looking to help as many people as I can. So if you know anybody out there that's looking to purchase a home, sell a home, or refinance a home, I sure would appreciate it if you could pass my information along. With that being said, if there's anything that I could do for you, I certainly would love to have you give me a call at 909-920-3500 and speak with me personally, and we can hash out some of these issues. I wanted to, in another income video, I'm going to go over the Schedule C because there's a lot of intricacies. I think that's probably one of the biggest misconceptions is when people are self-employed and file a Schedule C, they just don't understand why they don't qualify. You know, they're doing very well. They have all of this income and they have a nice car and they call us and they're not worried about it. They're not worried about the financing at all. And then we give them the news. Yeah, you don't qualify. Sorry. So I want to go over that in its own video. One thing that's come up on W2 people, what if your company is super cool and they give you like an $800, I don't know, SUV allowance on, I've seen the new Lincolns, they're super cool. So maybe a $1,200 auto allowance. You're a salesperson. You're a fancy salesperson and you need to represent. So they pay for that auto. They also give you some mileage and some meals. So think of it like this. If you don't claim that on your taxes, we can't use it. If you don't claim it on your taxes, we can't use it. In addition, that's a reimbursement type of activity where it doesn't show up anywhere as earnings or income. So it's kind of like go out and go spend, $50 and we'll reimburse you. And so there's not really a way to quantify that, even though if it's a benefit that you've been receiving for many years. No lender are going to allow that reimbursement to be able to calculate in income. Whenever I calculate income, I usually take the path of least resistance. So let's just say you qualify using your base income, but you get a bonus and overtime and all this other stuff. Well, if you qualify using your base income, then I don't even hassle the file or hassle documenting or validating all these other things. If you qualify with that base income, let's do it. Let's go to town. And when I'm qualifying someone, I've had people where I look at their income, they make really great money. And then I write down the 2016 W2 earnings. And then I write down the 2017 earnings. And then I write down the year to date. And then I average all that and I come up with one number. And then I might take the 2017 and year to date. I come up with another number. And then I come up with my year to date. And I look at my year to date and it's way less, significantly less than when I averaged all three together. Maybe they were off for a period of time. And that's why the year to date earnings are so low. Maybe they were injured and we have to document an injury. So there are some instances where you are making this base income and we can't give you the entire base income based on a history. So when you are looking to buy a home, which is that's one of the most important financial decisions that you can make, don't just leave it up to chance that the person you're working with is going to know how to help you in the best manner possible. You really want to be working with somebody that has a breadth of experience, someone that's a problem solver, somebody that's not a pansy that will roll over and let people tell them when a loan is a loan. Nobody tells me when a loan is a loan. No rep. Well, they may influence me and say that, hey, you're being a little bit aggressive. And that's when my relationships with these lenders is so valuable. I have these inside reps because, I'm a mortgage broker. So I'm a mortgage broker. I'm a wholesale lender. So I go direct to the money. Like I don't have a middleman. I don't have a big office. I have a smaller office, a smaller staff, and I have access to wholesale rates. So I can pass those rates on to my consumer. In that office, in that wholesale lender office, I have what's called a wholesale rep, a liaison. And these reps are crucial to my success. The profile of a wholesale rep is someone that has been around for 20 years. They do a tremendous amount of volume. If you have a obscure question on FHA, VA, conventional structuring, oftentimes I have my success. I'm a problem solver. I know how to figure things out, but I'm also, I rely on other smart people to help me. So, sometimes you can't figure it out on yourself, so I'll sit down with my wholesale rep and we'll brainstorm and she'll come up with something or he'll come up with something. I'm like, yeah, that's the way that that's my angle. That's my in. That's how I'm going to have success on this loan. So I forget where all that came from. Jocelyn, do you know what I was talking about? I think we were talking, being aggressive with income. You know, it's really knowing when you can push something and when you can't. And I always like to take the path of least resistance. So, but we always want to have success too. So we're going to push, we're going to charge, we're going to probably annoy some people, but you know what? We're going to win. We're going to win for you. So if you're looking to buy or sell in Southern California, pick up that phone and you call Teresa Timms, the SoCalLoanPro.com at 909-920-3500. We sure are looking to hear from you. Okay, let's see if we have any questions. Well, I don't see any questions. You all have a wonderful day, and I can't wait to hear from you.